And we're live. Hey everyone, my name's Nick Lambert. I'm the CEO of Doc Labs, and welcome to another webinar. This one is a really interesting one. It's looking at EUDI wallets. So we've been examining those a lot over the last kind of 18 months or so. And the event that we have tonight is really kind of double clicking on how these wallets are going to potentially impact payments and banking, which is a kind of really interesting sector. We're very lucky to be joined by Marie Austenaa, who is with the WeBuild consortium. Also been with kind of Visa, working in the digital identity space, and also with EWC, another consortium, and a bunch of other companies. So Marie has an absolute ton of experience in the space. So we're very lucky to have her on. So Marie, thank you very much for coming on. How are you this evening?
Very good. Thank you. And thanks for inviting me. This is one of my favorite webinars. So looking forward to contributing.
Good. Well, you're very biased probably, but we do appreciate that sentiment, Marie. And just to give a little bit more context before we kind of ask Marie to give a little bit of an intro to herself, and then we'll get started, is there's definitely a lot of these ID programs, and we all know or certainly have heard, if we're close to the space, how they're going to transform citizens and businesses and their ability to prove who they are. And specifically for banks and payment providers, it's really going to set up and provide a whole bunch of opportunities. But of course, with that, there's going to be a lot of challenges as well. Marie in the past has said, and we're kind of quoting from a presentation that she gave, that it's a present on a silver plate for banks. So we'll be asking her to explain that in a little bit more detail as we go through today's session. As usual, it's a kind of similar format for people that have attended before. And if you haven't, it's typically a Q&A with Marie and myself for kind of 40 minutes or so, 45 minutes. And then we'll cut to audience questions. So if you're in the audience right now, thank you for joining us. Please let us know where you are calling from. It's great for us to hear that information. And then if you have a question, then please feel free to ask it, and just adding it to Riverside. And then Francisco will collate. We normally get through most of the questions, not always, but he will collate the questions, and then we'll ask them to Marie towards the end of the session. And if we don't get through them all, we'll try and figure something else out. But typically we get close to that. So, but listen, thank you very much for joining us today. And so without further ado, Marie, if you could be very kind enough to provide a quick intro to yourself, and then we'll get started.
Yeah, no, of course. And as I said, very pleased to be here. I'm coming here in the role as the payment domain lead in the WeBuild consortium, which is one of the large-scale pilots, co-funded, working with the European Commission and about 200 other entities, companies, and governments around the EU, even some from the UK, in fact, in order to understand and shape how to use the European Digital Identity Wallet, particularly for banking and for payment services, but also for business use cases. So, I have counterparts within the consortium that's focused on business, supply chain. My role is really to look after the payment and the banking use cases. So very pleased to be here.
Oh, fantastic. Thank you. And I think you're joining us all the way from, are you in Oslo just now, Marie? Is that?
Yes, that's right.
Yeah, you are. You are. Fantastic. So I'm going to come back to that quote that I gave at the start, and it was at Money 2020. I'm assuming the European version of those two. And you called the EU's up-and-coming digital ID wallet a present on a silver plate for banks. If you could explain a little bit about that, what you meant by that, that'd be a great place to start off.
Yeah, no, absolutely. And I still believe that. Maybe not all the banks are, agree, but that's because they're not always aware, I think, of all the benefits. So just taking a step back, the European Digital Identity Wallet is a wallet architecture. It's like an app for the consumers that can hold a verified identity credential that's issued by the government. This identity credential can be verified. It has the highest level of assurance. It can be trusted. It has the same legal equivalence as walking into a bank branch and showing them your passport, and then they look at it and they've done the identity verification. So it can be trusted. It has high levels of assurance, and So if we take a few examples of the financial services of typical challenges that the bank has, one of them is to open a bank account. This is difficult, it's risky, and is really the foundation of the relationship with the bank. And it's regulatory, they have to comply with AML legislation. If they don't, their boss might go to jail. It's a big thing. It's hard. It's also very hard to do it across borders because the rules are different. So far, the AML legislation has been national, and the bank has to follow the process in their country where they have the license. They want to get into another market. It's complicated. It's something new. So, but with the EUDI Wallet, it will be the same all over Europe, same standards, same levels of assurance, and the member states must take the responsibility for the accuracy of the identity, and it's also accepted as a valid proof of identity verification under the new AML regulation that's coming, that's really harmonizing this. While the document verification process has improved a lot over the years, I think there's very little that can beat showing your face or entering a PIN to your phone and then presenting your identity digitally online in a way that can be trusted and which has the legal equivalence as well. So I think just that use case in itself, it is a gift and a silver plate to the banks because it's solving a fundamental problem. But there is much more. We can come into that.
Yeah, and I guess that's a problem. The cross-border stuff, like you said, that's definitely a big change for them and something they wouldn't need to kind of worry about different sets of kind of regulations and requirements. Is another one there, like the less friction for the user. They don't need to necessarily go in person to open up the account, and with less friction, you could potentially expect there to be kind of higher onboarding or higher those rates as well. So is that another part of that silver lining or silver plate, Marie, that they could hopefully get more onboarding into the bank as well as kind of doing cross-border stuff?
Yes, exactly. So if you have a good user experience and you know how to onboard customers in a different jurisdiction, in a different country, and that is pretty seamless, like the Face ID on the PIN on your phone, it's much easier to venture into another country. And I'm very curious to see what this is going to mean in terms of consolidation, expansion across borders in Europe for financial services and fintech and banks alike. All the banks are turning into neobanks, which would be kind of cool. But it's not just the onboarding process that you have to do the identity verification. It's any other time you detect something that's risky, or the customer wants to have a new product, say they want to enter into a mortgage agreement, or they take a leasing on a car and so forth. Again, all of those moments, all of those use cases, you will have the opportunity to check, is this the person that I think it is, or that is claiming to be, in a way that it's quite seamless and it's pretty uniform around the EU. So that is really a game changer, I think, for the banks.
Yeah, and for the user as well, like things like sending money and things like those transactions that can be quite laborious or require a lot of admin today, that can be something that can be a lot more seamless moving forward as well. So it can be a win all round. And of course, if that's easier, maybe more of those will be done through a bank. And then, of course, potentially more fees for the bank as well. Not that the consumer wants the more fees part, but it would seem to be a win all the way around.
Yeah, there is something fundamentally about having a trusted infrastructure that works the same everywhere and that you have kind of available on tap. You can always ask the consumer, who are you really? And it's the same APIs, it's the same responses that you're getting. It's at a level that you can trust. That is pretty magical. So.
And we've touched on some of these already, I suspect, in the previous question, Marie, but what other kind of use cases, even maybe through the kind of EUD pilots that you've been privy to with both of the consortia that you've been involved with, what are the types of kind of services, if you like, are going to benefit most from kind of European wallets and kind of, I guess, reusable digital identity that is going to come into play here?
Yeah, so just as a quick recap, the wallet can hold a digital proof, or it can hold a credential it can perform an authentication. So you can kind of sign a statement or sign an intention. So you can cryptographically verify this. And you can enter into a legally binding agreement that has, legal equivalence. So you can do the contracting, you can do authentication, you can do the identity proofing, and you can add, maybe not your full name and mother's maiden name or your full date of birth, but you can have selected disclosure. Yes, I'm more than 18 and you can trust it. So the kind of use cases that I'm seeing, and many of these we are now piloting as well within Rebuild. We need to get the real experience. There's still not that many wallets, so we need that experience. Firstly, I see account opening. We talked a bit about that already. I think that's going to be probably the easiest place. Nothing is easy, but the easiest place to start, because the wallets will be optimized for it, more or less, and the banks often use a third party. So account opening is a big area that can benefit. Signing on a contract for opening an account, getting a new card, applying for a loan, login to your account. No more lost passwords, an OTP app that doesn't work, or an SMS one-time password that somebody intervened and intercepted. So login, and also to authenticate the confirmation of changes, proof of address, for instance. Authenticating a new direct debit or a one-off transaction. Again, you have an authentication tool. You can also verify that the direct debit that you're setting up, that the account holder of the recipient is indeed verified. They've shared their account number in a way that can be cryptographically verified, especially for a one-off payment transaction. There's so much social engineering going on that being able to immediately verify that, yes, this IBAN or this account number belongs to the person that I expect it to belong to, in a way that doesn't require all the banks to connect together for that particular information. I think that's valuable. There's another huge domain, which is around authenticating a payment transaction. Of course, you can either kind of have as an alternative, or I wouldn't say replacement, but at least as an alternative to a banking app, definitely a replacement for an SMS OTP, so that the bank has another standardized tool for payment authentication. What you can also do, and this is something that we already demonstrated in EWC, but what you can also do is to let the merchant request the wallet to perform authentication of a particular payment transaction, especially if they at the same time need to confirm age or student status or something else, and then they can also ask, can you now also authenticate for the payment? And then they can share that with the bank. That creates completely new use cases and a very different user flow as well. It's a bit like the wallet experience everywhere. But payment authentication, it's a huge one. But then also payment using the wallet itself as a payment method. So you have your payment credentials stored within the wallet and present that for payment. So, there's a number of areas where the wallet can benefit payment. And there was just a few examples.
Yeah, they're great. Really good. And I think probably like CISOs across kind of financial institutions are probably breathing a sigh of relief, I'm sure, once they move away from OTP and SMS authentication methods. They'll be certainly breathing a sigh of relief. So, and it sounds like, Marie, from what you're saying, there's an awful lot of features packed into one place. I mean, you've got everything there. You've got ID, you've got the actual payment mechanisms and stuff, and it's all inside this wallet. So it's hopefully going to be a much less fragmented approach than maybe what we have today, where there's stuff in different password managers and things like that. But I'm guessing as well, it was just going to take time for this to kind of get set up and people to start using that at scale. And we'll maybe get into that a little bit as we go through, but it certainly has the promise of something very, very good.
Yeah, no, I agree.
We talked a little bit about kind of account opening being an advantage and making payments across borders being a kind of another obvious advantage. How can you talk a little bit more about that for us, Marie, in terms of how it's going to change those things? I think you've already kind of illustrated that to a certain extent with the kind of account opening, not necessarily being required to be kind of necessarily physically present at a bank or needing to show a government issued passport. Are there other things that are going to change? And also, how does it change for making those international payments?
Yeah, no, of course. I think especially cross-border might have the biggest benefit. Then you can always think about, well, how often do I open a bank account across border, or how often do I send money abroad? But, I still have my Revolut account, right? And that's kind of cross border as well, because it allows the bank to enter into a different market. And I think this is it's a good use case to double click on a bit, because it's probably where the wallet can add most value initially. It's where the wallet capabilities, what the member states are providing in terms of credentials, will be most ready, as opposed to some of the more, being able to support payment, being a payment mechanism, for instance, that may take a little bit longer. So today, to open a bank account, you either go in person. I think still you'd either go in person to visit the bank branch, or at best you might do a document verification using NFC, or in worst case, OCR. Deepfakes, it just, generative AI makes me really, concerned. It's just no longer an option. It has to be based on cryptography, like NFC at least. That makes that's possible. Of course, there are markets today already with an existing digital identity. I'm a big fan of my Norwegian bank ID, but it doesn't help me to open a bank account in the UK, as an example. There I had to go, in person and show them my passport and my proof of address and everything else. So I still think there's enough benefits for the account opening, but also for making a payment. Another horror example is making a payment abroad. My bank in the UK spent 45 minutes trying to dissuade me from making a payment into this was my own account, it was just in a different country. That should not be necessary. You're more scared when you leave the phone call than when you started, kind of thing, and you know what you're doing. But there's a reason why they do it. It's all, social engineering, and it's so easy to be, persuaded to send money a wrong place, and they have no way of getting the money back again. So I think those two use cases, cross-border payment transfer, where the bank can then always verify, is the recipient of the money really the recipient that you expect? And here, I think with having a wallet with an identity credential, it is basically just a Face ID. It's a PIN on your mobile to confirm your intention to share your identity, or to sign the agreement for account opening, or authenticating a cross-border payment, or validate the recipient as well. So I think that one, there's a lot of cases. You need to update your address, for instance, or revalidate your account details. That's not the easy way of doing it. So I think that use case should be, hopefully, nothing is a quick win, but it's a good place to start.
Yeah. And hopefully a lot less kind of frustration from the consumer. You could almost hear it in your voice when you're explaining the kind of 45 minutes it took it sounded like almost make a payment to yourself. Hopefully there's a lot less of that. And of course, banks do these not because they want to be difficult, although it sometimes appears that they enjoy that process. But for the most part, they're trying to prevent, obviously, fraud, which is at pretty high levels, I would say. Do you expect the EUDI wallet to have a significant impact on fraud prevention when it kind of comes into force and we start to see that kind of scaled adoption?
We do see that markets with where a digital identity is used extensively, that it does give a good level of protection for fraud. It doesn't mean that it's a panacea. It's not going to solve everything. So if I look at the domestic wallets, and my favorite domestic wallet in Norway is Vipps, I think, okay, we only have one, but still absolutely fantastic. And when the consumer is onboarded to Vipps and they established account, they're onboarded using their digital identity. It's not of this just an email round trip or an SMS OTP. It's actually with your bank ID. In the credential, whether it's a bank account or a card that you store in that wallet, again, you have to authenticate that using a verified identity, your bank ID, which means that the whole integrity of the wallet is pretty high. They have effectively or very close to zero fraud. But there are other attack vectors for sure. So I do expect that we will see the same results with the use of the wallet, assuming the onboarding process can be trusted, that the identity credentials is really issued to the rightful holder and to the person that intended. So the process to issue the identity credential must be accurate and must be trusted. There also needs to be kind of continuous monitoring of the integrity of the services, detecting abnormalities, risky transactions, and so forth, so that we know that it continues to be be a tool that can reduce fraud and that can be considered to be safe. So it doesn't come by itself. It will take effort, but generally by having the ability to cryptographically prove and a strong identity verification process that can be trusted upfront. Maybe we're coming back to in person, at least this once, but it's like your passport, right? But then yes, absolutely. I think we should really see a reduction on fraud. And that's also partially the motivation for setting up such the regulation as well as the technology and the wallet. It is really to combat fraud in Europe and to make Europe much more integrated and much easier to do business and across the borders as well. So it's a way of trying to harmonize in the digital way, but that's many more topics here.
Yeah, very interesting. We've kind of looked at user experience, which seem like it's going to be better, and kind of security being better as well. But are there other kind of services? I know we've kind of focused on a few already, Marie, but are there other kind of services that the EUDI has built into it that would be able to be utilized in due course?
Yeah, no, of course. So we talked a lot about account opening, a little bit about payment transactions as well. Basically, the wallet allows three things. It can receive, possibly request, but at least it can receive, it can hold, and it can present a digital proof. Something that is issued by an authentic source that you can trust, and it can be verified in a machine readable way. That this was cryptographically. It can be cryptographically verified that it came from the authentic source. In other words, it can be trusted. It can perform a digital signature that is legally binding according to law, QES. The IDAs included even in the UK to some extent. And it can also authenticate or sign a transaction to confirm your intent. That's very basic capabilities, but when you put them together, it becomes pretty powerful. So you can sign a legally binding document, entering your PIN or showing your face. You can log into your bank account. You don't have to worry about your passwords. Confirming age. There's so much more legislation coming in now requiring the confirmation of being above a certain age, whether that's social media, whether that is buying energy drinks, let alone the kitchen knives or, tobacco or alcohol or whatever. But it's more and more is coming in, and the whole intention is to make the internet a safer place, to keep the children out, the minors out, of course, from services they shouldn't be anywhere near. So just that in itself can help, because you don't need to, as I said, share your full date of birth. You can also use it to confirm eligibility. So say you'll be giving a student discount. If you subscribe to a service or you travel on the underground, you get a discount because you are a student. This would allow you to, in a way that is digital, to share that confirmation in a way that can be trusted. I think one of the probably most mind-opening use cases I heard was from the UK, when Visit was talking about their wallet that they are now, planning the government verified. And basically they said, well, we also have the open data. We have to make government data available under certain circumstances where required. But instead of setting up APIs, we are going to allow this to be shared using a wallet. So the holder, the consumer, or indeed a business can request the data, and it'll be sent to be requested by the wallet. It'll be authenticated. Yes, I generally want this data, and then it can be presented with the consumers with the holder's consent. That is quite powerful, that any data that's available about you, you give your consent to share that to whoever needs to know. And there's also, a different topic we can touch on a different time maybe, is that the one who is verifying or requesting this data also needs to be authenticated. They also need to have a right to know this data so that you're not oversharing, they're not using it to tracking and so forth. So there's all sorts of possibilities that to add trust to and convenience to a digital transaction that this kind of wallet will enable.
It's interesting, Marie, because quite often I get into debates with people, like, I think there's a genuine concern with people across Europe that this is going to be a significant impact on their privacy. There's going to be ability to correlate at a higher level. Everything is much more digital. Records are kept. We all know that certain big companies, not all, but certain big companies like to hold all our data and use it. And I think there's a genuine concern that this is going to be the start of kind of Big Brother watching us. And I'm not saying that some of those concerns we need to be careful that doesn't happen. But you've just highlighted there some things around zero knowledge proofs, which is the selectively disclosing only parts of about you or the information on the credential to the relying party or the verifier. You don't have to disclose the entire contents, just parts of it. Like you said as well, that's information that's being controlled and consented to by the user. So there are some kind of guardrails in there to protect the holder's privacy and try and minimize the amount of sharing they're doing as well. So it's not necessarily all bad news, although there is a concern amongst a lot of citizens that that this is going to be a big change for them. So I don't know if you have an opinion on that.
Yeah, there is a valid and genuine concern about oversharing data. It becomes so easy to as I said, it's a PIN or a Face ID on your phone, right? So it's so easy to share your identity. That's where there must be safeguards in place. One is around the relying party, the verifier, the company, the entity that's asking for the data. They need to have a genuine reason for why they need the data. This is not just because I want to know for marketing personalization purposes. They need to have a genuine reason to know, a business interest. They also, within the trust framework in the EU at least, they need to be registered. They need to be on a trust list, so that they have a good reason. And if they're not, then they cannot ask for the data. There's also capabilities, and this is, I don't think it's technically fully developed, but there are capabilities, there are requirements for mutual authentication. So the verifier, the company that's requesting the data needs to authenticate, needs to declare who they are to the wallet, and the wallet can then check that, this is a genuine request, this can be trusted, they are on the trust list, they should be able to get access to this information, and then the information can be shared with the consent of the user. So I'm hoping we don't ending up in the kind of the cookie thing that you just have to click OK, otherwise you can't proceed, right? There has to be a genuine alternative. But at least these mechanisms are much better than anything else that we have today. And in order to kind of protect privacy and so forth, the key will be to make it so seamless and easy to use, both for the merchant, the relying party, the business that needs the data, so that that's not becoming a hurdle to use the wallet and to rely on the wallet, but that, so that for genuine businesses, this is no problem. This is easy to get access to for all the right purposes. But if you don't have that, well, then this should be a bit more difficult. Yeah, so many other mechanisms, but this is a really important aspect.
Yeah, that's really helpful. It seemed at the start, when we've been talking about EIDAS, it seems like forever, right? And the EIDAS 2 specifically for a good couple of years. And it always seemed to me like something way off down the road. And we would advise our clients, look, you need to be looking at this now because it will just appear. Mm-hmm. And it seems like kind of that's what's starting to happen. And I think that the member states have an obligation. They're kind of regulated to or mandated to provide a citizen identity wallet within all 27 EU member states by Christmas Eve, I think, this year. So I don't know, 11 months away or something like that. It's clear that many are not in the position they need to be in to make that happen. And there's a lot of features that we've talked about today as well that we're talking about putting into these wallets. So they require trial and error and things like that. Which leads me to the grand question, Marie, of these EUDI timelines are now starting to seem very aggressive. Are you worried about these timelines? Of course
I'm worried. There's a lot of work that needs to be done, and Christmas Eve this year will come very quickly. But that's the present that we promised. As you said, the member states need to have the wallet available to the citizens by the end of the year. The citizen must be able to download the wallet app and request an a verified identity credential. Then a year later, 12 months later, relying parties, businesses, banks, merchants, the big platforms must have the facilities in place to rely on the wallet, to use the wallet for user authentication, like for opening a bank account, for logging in, and so forth. At least those basic use cases. Probably even age as well, although I'm not sure about how specific the regulation is on that one yet. So there are these timelines and obligations. Are we going to meet them? I don't think so. I was at the Launchpad event by the European Commission back in December. We had the German wallet team on stage talking about how they would be ready by Q1 2027. And then we were talking to the Polish as well, and they said, yeah, we are already testing. We will have our version 3 ready in the next few months and so forth. So my point is that governments are working on this. I haven't seen anything like it in terms of activity and action. This is a train that's coming. It's not like the member states are saying, we don't want this. They've all agreed and taken it through. Everyone is now realizing this is essential in order to create that single market in Europe, the harmonizing, effectively operationalizing the EU, so to speak, for digital transactions and for business benefits, to reduce fraud and all the benefits that we talked about that comes with the wallet. We have to realize that. We still have a few questions. We still need to take some, decisions with the parliament. You can see how member states are making the necessary legislative decisions as well that they need. But it is happening. That's the whole point. Work is going on. The train is in motion. It's just a question of when, but not of if. There are bigger questions on the level of adoption among the consumers and what the landscape would look like. But at least when it comes to the wallet, being launched by the governments, I'm worried about the timelines for sure, but I think we all need some time. There's so many moving parts. We're still looking at the standards and crossing our fingers that they will get to the last draft and so forth. And this is January 26, and we have until December, as you said, just less than 11 months. So, but it is a question of when, and it's not years ahead after the deadline. It's my opinion.
Yeah, and it's one that we've heard before, so I don't think you're necessarily going out on a limb to be concerned about it. But I think, and maybe we'll be somewhat like, most project managers would see the bulk of the project happens in the last kind of few days of it. So maybe we'll see a bit of a rush there just to get things moved through. Marie, when we started talking about just tonight, we started looking at, we talked about banks and payments really as a focus. What do banks need to overcome by, the end of this year and into 2027 to make a lot of what we talked about a reality? Surely there's quite a lot of work for them to do.
Yeah, no, there is. So first they need a wallet. It's a good place to start. So if the member states are not ready in time, then they can still get on with the work. But that's the first one. The wallets really need to support the technical requirements for payments as well. That's in addition to the architecture reference framework, but maybe not for account opening, but at least for payment authentication. So there's a bit about that. But I think the biggest thing is the preparations that the banks need to do themselves. They have to embrace this opportunity, decide where to focus, change the business processes, allow the wallet, for example, as a tool for identity verification for account opening, as a alternative or a complement to a banking app, as an authentication method, as a method to verify and to let the consumer sign a mortgage agreement, for instance. So those changing the business processes, I think, is quite major. The other thing is that the banks have a lot of old technology, really some old infrastructure, but this isn't something new. It's not the wallet that means that they have to modernize part of it. There's lots of other regulation. There's also the digitalization of the banking infrastructure in general and so forth. But there's a lot on the plate. We have PSR coming, and that's going to be exciting in terms of implementing the technical requirements as well. My hope is that there is a certain level of alignment. So satisfying PSR will make it easier, and not maybe even part of that will be addressed through the through satisfying or making use of the EUID wallet as well. So we're looking for some synergies. So it is hard. They also need to understand what's the impact going to be on their risk profiling. What type of risk signals will they get from the wallet? How can they rely on that? And there's so many unknowns basically. And at the same time, we're still working on defining the standards. So there's a lot of work, and they're moving in an uncertain environment as well. But honestly, everything is so uncertain. Whether that's geopolitics or whether that is technology with AI, it's just the nature of the world. And this is not necessarily the most uncertain element of the future of the banks, I think. So yeah, they just need to get on with it.
Yeah. It's interesting. You often find that I'm not saying that the technology development is easy by any stretch of the imagination, but it's often the stuff that is the simplest, and actually either bringing organizations together, bringing standards to the fore, getting people to agree on things. That's often where the time is, and the really kind of hard, the hard yards are in that part, not necessarily in just developing the features, although they're not simple in themselves. There's a really good conference that many will go to every year, the European Identity and Cloud Conference, run by Coopinger Cole. I think it's mostly in May. The ones I've been to have been anyway. And you were a panelist at one of the sessions there, Marie, and during one session you drew parallels between global payment networks and then also global identity networks. There's a lot of similarities between those, and interested, as someone that's been in the payment space for a long time, what can the identity community learn from, what advice would you give coming from the kind of global payment space and a lot of your kind of time with Visa?
Yeah, no, of course. So payment networks, such as Visa, MasterCard, in particular, the global networks, they deliver what I like to talk as trust at scale. You use your card, it doesn't matter where you go, it works. And you know that the shop gets paid and the right amount of money is taken from your account. The user experience is pretty good. It's very predictable. It's the same way all the time. And if something goes wrong, you will get the money back. The bank has the tools to get the money back through that chain. And remember, this is unrelated parties. The merchant, the place where you're paying, doesn't have an agreement with your bank to get the money. That happens through intermediaries. It happens through common standards and rules. It's a bit like magic, I think, but it isn't. It's hard work. And there's a number of elements or components that are required in order to deliver trust at such a global scale that I think that the identity networks could really benefit from. So at the foundational level, you have the standards. Okay, one example of those defined by EMBCO. There's a number of other standards as well. And these are implemented, they're tested, they're certified. And there are thousands of service providers across the ecosystem that are delivering the service to merchants, to banks, and everyone in between, right? Which is easy to forget. So even looking at what the banks need to do, it's not just them, it's the rest of the ecosystem as well. And that needs to be based on open standards that are accepted and agreed. And the second point, the standards are pieces of paper that you can test against. Then you have the rules, operationalization of the standards, but also of agreements. So the merchants need to do certain things, the acquirers, the issuers, the processor, the networks. And these rules are not just pieces of paper, but they're monitored for compliance. And they are linked to regulation as well. So you can see how this takes people, it takes technology. Then you have, of course, the infrastructure. It needs to work all the time. I don't know how many nines there, but there are probably 6 or 7 nines. Fraud monitoring at a scale that, in terms of the transactions and detecting abnormality. Advanced technology, cryptography, the chip on your card, the tokens, all the management around that. So that's quite sophisticated technology to make it all safe. Of course, then it's the user protection part of it. You call your bank and their processes to give you a refund. Fraud, we already talked about that. A predictable user experience. It needs to be so easy to use that I can use it 10 times a day. Touching my card or just with my a Face ID on my mobile in order to authenticate the transaction with say with a passkey. So the user experience in top, and this takes people. Don't forget, I mean, both Visa and MasterCard have thousands and thousands of people around Europe helping to implement new services, monitoring the fraud, and making sure that the ecosystem is adhering to the same rules and so forth. So I think there's a lot to learn, and of course I can keep going, my favorite topic. But to succeed with a wallet, we need to approach it as an ecosystem and consider all these elements. So I think that there's a lot that we can learn from the payment networks in order to succeed. But it's going to be a bit of work. It's not just getting the wallet into the market.
Yeah. And I guess we can be somewhat enthusiastic or at least optimistic, Marie, that a lot of the things that this ecosystem approach, that is the one that's been taken within the kind of EU, it would seem. And also the things like the use of open standards you mentioned a couple of times. We're waiting for standards to come through, and by their nature, they are slow because a lot of stakeholders need to input into that. And that's why you get standards that work, that people buy into because of that process of that time. So I think we can hopefully be optimistic that that is the approach being taken. But yeah, there's no shortcuts, it doesn't seem. It's just going to take a bit of time to kind of build up what is a kind of myriad of different things to make an identity ecosystem successful. Okay, so moving into probably one of my favorite topics, I guess, is AI and kind of agents kind of operating on our behalf. I just think the whole sector is absolutely fascinating. So definitely keen, while I have you here, Marie, just to also kind of pick your brain a little bit and get your perspective on how you see things. So we're seeing, or we're certainly hearing, AI agents and as they relate to agentic commerce, they're here already. I saw something that was an article, I think, this week, and it was predicting something like $9 trillion of kind of e-commerce value that could be related back to that I think's agent are going to be processing by, I think it was 2030. And it was making the point actually that this is happening already, but a lot of e-commerce's platforms and kind of analysis tools are not sophisticated enough to actually know that these agents are visiting their platforms and their sites. So this is a thing that's happening already, and it's just going to scale up. With that said, what's your perspective on things like AI agents and how they will fit into these digital identity ecosystems? What do you think is going to happen there? What do you think we should be looking out for?
Yeah, it's a huge topic, of course, and we could probably spend, another hour discussing this one. There's a few fundamental problems. How do you know that the agent is acting on my behalf and that the agent is doing what it's allowed to be doing so that I can take responsibility? It's not going to be possible to get if the agent does a mistake, how do you get the recourse for that? The agent will act on my behalf, and then that needs to be verified that it really is following my intention, that it has understood my intention as well, which is another hurdle. But that's just me and my agent. You also have the agent will interact directly with a merchant or a business or via an agent that is representing the merchant, the business, depending on if you're talking about a payment transaction or not. But and how do I know that agent as well is the right agent and has the right, mandate and the right intentions and everything? That chain of trust needs to be established. So I think that the wallet will have a very important role to play in that, making sure that chain of trust is there. We talked a little bit about the mutual authentication capabilities as well, that inherent within the wallet and within actually the regulation around it as well, that the wallet will request the relying party, the verifier as well, to authenticate who are they and do they have the right to get this information. That's a very similar mechanism that these agents need to have as well. But then, of course, it starts with what is the identity of the agent? Does the agent have its own identity? Does it has a delegation in terms of my identity? And how can it carry the proof that, for instance, I have a student status that should give me a discount on this particular purchase? So there's all sorts of questions that I think the extensive use of wallet with credentials will help to resolve. But it's really that chain of trust that worries me most.
I think it's the scale as well, Marie, isn't it? Because I think today you have, we sleep at night. We've got limited time. Like there's typically one of us, and we're the ones going and making purchases. In this new world, I read one stat that suggested up to 44 agents per person, which it seems excessive, but maybe that's going to be the case. If you can imagine the scale, if there's even 20 agents representing one person, all kind of moving through different sites and platforms, making purchases on our behalf, hopefully at our behest, but you can start to get a sense for just the absolute scale of the problem if it all goes wrong as well. So I think that's a kind of an interesting and also kind of worrying thing to think about. You kind of you raised the question yourself, Marie, in your answer, where should agents have their own identities and things like that? I'd be interested to see what's your answer to that. Do you think they should have their own identities and wallets and things?
I think agents needs to be identified, and I think the link to whoever is responsible for their actions as well needs to be very clear. I use Gen AI and all the other tools that's available. But one of my biggest worries is at what point do we give up on understanding what's real and what's fake? Is this agent really acting on my behalf, or is it just inventing things? And I can have arguments with ChatGPT. We all can. If you know your topic, you will have big arguments because it'll lie to you and it'll tell you things that are not correct. So I think that the rapid scale of evolution that's happening and changes all the time, as well as the challenges to determine what's real and what's not real, the agent needs to be more accountable, more clarity about who are they acting on behalf of, and how do we know that they're acting with the intention that was intended.
Understood. And they must also be, which I agree with, they must be distinct from the actual user itself, because if something goes wrong, you must be able to assign liability. Was it the agent? Was it the user, etc.? So I think that's a key part. How is the payments industry at large approaching this for identity, just to try and maintain trust in online transactions? Many of us have perspectives and views, and we've probably shared those a little bit this evening. How is the payment industry? I see almost daily announcements come out from some of the payment networks, it seems. Are they, in your view, kind of on top of this? And are they how are they thinking about maintaining trust in these transactions?
In terms of agentic?
Yes, exactly.
Yeah. Well, I think pretty much at least the two big global payment schemes have all announced activities around agentic commerce and how they are adapting existing technology, investing in new technology to make it possible to make safe online, to really realize the potential with agentic commerce, so that you can send your agent out with a token that's a card token that represents you, and it can act and provide and do a purchase that you've allowed it to do, that it has the mandate for. So it's all, there's lots of investments, lots of pilots and trials going on, lots of announcements as well. But there's a bit of, I think, new tech that is needed. I think we do need to get the concept of cryptographic proof, because that's not something that you can, a Gen AI can't fake it, basically. It is signed. It can be validated. So there's some of this underlying technology that's really going to help us to scale agentic commerce in a way that makes sense. So, yeah.
Yeah, clear lines of delegation, I think, is something that's often overlooked as well in these process. Everyone thinks about wallets and things like that, but actually having that clear line of, who is the agent representing, I think that's a kind of key aspect as well. Do these liability models with the payment networks already have in place, do they break down when something goes wrong, when you get these new economic actors of agents coming into these transactions? In your view, do they start to break down and cause issues, Marie?
I wouldn't say break down. They are well-established liability model that needs to be maintained and maybe adapted, but it does make it very challenging to know who's at fault. If your agent made a purchase on your behalf, did it really have the mandate to make that particular purchase? Did you ask it to buy shoes as opposed to a dress? So, and then who's at fault if it buys the wrong thing? So I think the existing liability models is able to sort out, so to speak, a lot of these use cases. You can get the refund from the merchant, for example. But we do need to have the fundamental capability of authenticating the payment transaction. Often, as you said, the agent might work on your behalf during the night, right? And you're not going to be there to authenticate. So it's important that the agent can act on your behalf within the limits, the very explicit limits that was set. And of course, there's technology for that. You can have a spend limit of say €50, or it can be limited to these kind of merchants, for example, or that particular time. So there are kind of safeguards that can be added to your agent.
Absolutely, and to enable autonomy. Absolutely. Marie, we're going to move into audience questions just now, kind of coming up to the last kind of 10 minutes of the session. So I'll ask them as they're written here. So we have Adrian. Adrian, thank you for joining us. Adrian says, hi, Marie. He's asking about, for payments, does the EUDI Wallet provider need to certify as a PSD, which is a payment initiation service provider, or PISP, to trigger payments? So I guess, do they need to have, some kind of level of qualification and vetting in order that they can kind of certify payments?
Yeah, that's a good question. My view so far is that the wallet can hold the payment credentials and that they can be called upon via PISP. For instance, a bank account, and that can be called upon, and then you can use that IBAN credential, IBAN attestation, to authenticate a payment and to initiate a payment through the use of a PISP. So they need to be in the role, but the wallet itself is just holding the credential.
Understood. Okay, that's helpful. And Adrian kind of extends that question a little and is asking, and what happens to fraud liability if the wallet does strong customer authentication instead of a bank? So the customer doing that. Yep.
Yeah, so that's a really good question, and it's a challenge. The way that, so in these pilots are now supported by the architecture reference framework, the way that the industry now thinks about how the wallet can do payment authentication is that the wallet will hold a credential, an authentication credential. In the Europe speak is called an SCA attestation, but it'll be held in the wallet, but it'll be issued by the bank, and the wallet will then be considered as yet another piece of wallet technology. So it's just third-party technology. So it isn't really the wallet that performs the SCA, but the actions that the bank can request. The bank will issue this attestation to the wallet when they need to perform an authentication. They can request that attestation to be presented by the holder again. And it just resides in the wallet, but it's presented to the bank. The bank recognizes, yep, this is the person and the account and the credential, and they now sign for that particular transaction because, the dynamic linking, they presented the amount and the merchant and so forth. And then the bank says, yes, now I understand the authentication was done correctly. We agree. The bank takes the decision. So even if you shift that authentication to the merchant, at the end of the day, it's the bank that decides, and the wallet just holds an attestation or a credential like any other credentials that it holds. So we're looking at it just as a third-party technology in order to avoid the whole problem around outsourcing and delegating authentication. It's quite a complicated regulatory topic, and this is the view that we've taken within the consortium. I can't say that this is in agreement with the EBA because we don't know yet. So, but we don't believe that the liability will shift from the bank to the wallet. The bank will retain the liability, and they will not consider that they're delegating authentication to the wallet either. They remain in charge.
Okay, great. Yeah, thank you. Great answer and great question, Adrian. Thanks for that. Agnes is asking, can the EUDI wallet work as a payment initiation tool? By which I think she means rather than starting the initiation for payment through the bank and then using the wallet maybe to verify who you are and where you want to send it, I'm thinking what Agnes is asking is, can you actually start that process in the wallet?
So we are experimenting with that, both in the way that can the wallet hold a card credential, a digital card credential of sorts? Can it hold an IBAN, for example, and then present that to the merchant, and then the merchant can take that as a means of payment. And then, of course, they need to present that back again through the ecosystem to the bank so they can get paid at the end of the day. There are some very interesting technical challenges for that. I don't think it's impossible. We also need to have acceptance. So if I'm a consumer and I walk into either to a shop or to a online merchant. I need to know that, yes, I can use my wallet. But there are standards for this now. So my expectation is that this should be possible over time, but we're still experimenting with it.
Of course. Great answer. And thanks, Agnes, for the question. David is asking, what level of control will users have over the data they share versus the data merchants are requesting, which I think links back to kind of selective disclosures and things from earlier on. But maybe you could chip in on that one as well, please, Marie.
Yeah, so selective disclosure means that you only share what's necessary and what's being asked for, not all the data. That's a fundamental principle. The merchants should only be allowed to ask for what they can justify that they need. How exactly that's going to be operationalized, I'm not sure. It's being worked on, basically. Whether the user can choose not to share, whether some of these will be optional items or not, that's kind of up to the merchant. And I don't know what it will look like. But there will be requirements on the merchants too that want to rely on this to justify why they need the data.
That was a great addition there as well, because David went on to ask, will merchants be regulated in terms of minimum data requirements? So you did you answered that question without even knowing it had been asked. So that's fantastic, Marie. You can definitely come back. Peter, I think it is. And sorry if I've got your name wrong, but he's asking, would you expect banks to become QTSPs, Qualified Trust Service Providers, when integrating EUDI, or at least the SCA, which is the Strong Customer Auth? So do you think banks will need to become these Qualified Trust Service Providers?
Yeah, this will be my personal opinion, of course. So good for adding that at the end. It depends. So you need to be a QTSP if you're going, or a QEAA issuer. These attestations comes in a different, or credentials comes in a different flavors. They can be a qualified, or they can be just an electronic. If they're qualified, then you can really trust them, and the burden of proof is not on you if something goes wrong. For EAA, there's a lower assurance level, and it's of course cheaper. It has less requirements as well low requirements. When it comes to the authentication credential, maybe even the payment credential itself, we are still discussing and evaluating. There's so much safeguards around it, around the ecosystem in terms of rules and regulations, that it may not be necessary to be a qualified issuer of these attestations, because we might be sufficient to be an electronic attestation and not a qualified one. But there might be that the banks will like to issue other things, other credentials that needs to be qualified, and then they will need to become a QTSP. My expectation is that the banks will prefer to rely on partners and service providers. QTSPs is a particular role within the IDAS that requires audits and conformance requirements and so forth to many different issues. They may choose to rely on partners to perform that role for them, as opposed to becoming QTSPs themselves. But there are many factors.
Very good. Well, listen, I really appreciate that. It was nice to finish on a kind of personal opinion note there as well, Marie. But thank you very much for joining us. We're out of time, but we actually managed to get through all of the questions and pretty much all of the audience questions as well. So we can pat ourselves on the back and say, job well done. But I really appreciate Marie Austenaa for coming on and taking the time to give us some such great insights. And we really appreciate everyone who listened along, either in person or in demand in the future, and also for all those that asked questions. But thank you very much for joining our webinar, and we bid you a good night.
Thank you. Good night.